Hi there! In this final part of a 3-part video series, we are going to test out a third suggestion from this video. Can this really live up to its claim? In the previous 2 videos we already used the RSI and CCI indicators, and in this video we will test out if the MACD usefulness in crypto trading is good enough. This video presents bold claims in its title. These settings never fail, impossible to lose with this strategy. And in my last 2 videos we tested out RSI and CCI indicators. Up until now the title of the video is a little bit doubtful, since the RSI indicator let us down, but the CCI indicator gave us some hope again. The score is now 1-1 and the coming MACD indicator rules will make the final decision. Now, conform the rules that were proposed in the original video, we will add 2 MACDs to our chart. Both of the MACDs will use only the histogram. The first MACD for the detection of pullbacks has the following settings: a fast length of 13, a slow length of 21, and then we'll apply some visualization tricks to make it better visible on the chart, and then move on to the second MACD setting. And the second MACD is for detecting the overall market trend and has a fast length of 100, a slow length of 200, and a smoothing factor of 50. And here we also have to apply some visualization tricks, and then we will merge both the indicators onto one window. First add the fast MACD to the existing pane and then pin to the same scale. Now for long trades, the fast MACD with the longer time settings should be above the center line, and when the shorter MACD gets below the center line, it indicates a pullback. And then when the shorter MACD gets above the center line again, the pullback is probably ending and the price should continue to go upward, so a long trade entry can occur. Now note here that the MACD lines do not have to cross each other because each one of the histograms is used individually here. For short trades there are the following rules. The short entries should occur where the long MACD is below its center line, and then a pullback of the shorter MACD should be above the center line, and then when the short MACD gets below the center line again, an entry signal to go short occurs. You can now enter the short position. And just like in the previous 2 videos I made, there is no mentioning of a stop loss or a take profit rule in the original video. So it's hard to really test out the claim that we cannot fail with this strategy. And to be honest, we have the freedom to determine here how our own exit signals can occur, and we can then apply those favorite exit rules to the strategy. And also for this strategy to test in a scientifically proven way,
yes, science!
I created both a Python script for my backtest engine for automated backtests and a TradingView strategy script for visualizing trades on the chart. Both the Python code and the PyScript are downloadable from my Patreon site for patrons. Here you will support my work by becoming a patron and also have access to all my other trading strategies and PyScripts, including access to my ebook about algorithmic trading for beginners, also buyable on Amazon of course. Now, if you follow my channel, you already know that Bybit.eu was recently introduced and is quickly becoming one of the largest centralized exchanges that is also MiCA licensed and thus allowed to provide cryptocurrency services to European citizens. And if you want to get an additional welcome bonus, then click on my affiliate link in the comment section below or use Get Bybit when you sign up. In the backtest, the MACD signals gave marginally better results in contrast to the CCI indicator. But don't think this is a bad thing, because the numbers you see here are quite normal for such simple trend trading strategies. So don't worry about this. It's more interesting to see how the performance curves looks like. For example here, the equity curve of these trading rules are not as optimistic as the CCI that has catched big waves of trends, but this time it slowly inclines, and these curves are not bad at all. Because a slowly inclining curve indicates that the strategy is a steady grower and is somewhat predictable. More zigzaggy curves are less predictable and can indicate irregular trades and make a person quite nervous all the time. Unfortunately, these drawdowns are looking a little bit worrisome, and almost 50% drawdown is never nice to see because you can expect these kinds of drawdowns in the future as well. In comparison to the CCI, the MACD is a less certain indicator, and this is because of the MACD histogram. At times it can sawtooth around the zero line, creating these false signals. We can also clearly see this in TradingView when I visualize the indicator and its proposed settings. Here you can see on the Dogecoin chart that in this bearish trend there is a zigzag around the zero line of the quick histogram. And every time the quick histogram goes below the zero, there is a potential short signal here. And these false signals can only be prevented by additional trading rules. For example, choosing these by adjusting the indicator settings. We can choose to use the pullbacks as additional rule for entries, or just use the standard cross-down entry mode. You can also choose for a more aggressive exit strategy every time the quick MACD does a reversal around the zero line, or we can ride the slow MACD trend once we have the initial entry signal generated. And of course we can choose to use the stop loss and take profit settings based on risk versus rewards. Now with these settings, using this strategy could have huge future potentials when used on Dogecoin. But it's up to you to test it out on your own favorite pairs, because it is not guaranteed that these settings will work on all cryptocurrencies. And now at the end of the third video, what can we say about these no-fail, never-lose trading strategies? What can we conclude about these? Well, the CCI and MACD rules are certainly worth trying out further, and doing some more forward tests is also advisable. Also adding your own favorite third confirmation signals and special exit indicators could make these work out really well. So in a way, these strategies do indeed not fail, but only after some real good testing. The proposed RSI strategy was not great at first, but maybe using the moving averages of these RSIs can do wonders. But for now, this is it, and I hope you like these videos and what I do here. And if so, click the like button and subscribe. Thanks for watching, and I will see you in the next video. Goodbye!